This episode of On the Record is brought to you by Associated Equipment Distributors. I'm Executive Editor Kim Schmidt. Welcome to On the Record. Here's an update on what's currently impacting the ag equipment industry. Results for the first half of Kubota's 2022 fiscal year have seen the company continue to grow its North American revenue. The last earnings report showed $3.6 billion in North American sales, up 21% year over year, and $9.4 billion in total revenue. This means North American revenue made up 38% of Kubota's total revenue for the first half of the year, the highest half-year percentage recorded in the last 10 years. North American ag revenue rose by a greater percentage than total North American revenue did for the first half of 2022, up 23% year over year to $2.4 billion. However, since 2017, Kubota's North American ag revenue has risen 86.3%, below the 119.4% increase in construction revenue over the same period. The percentage of Kubota's North American revenue coming from ag in the first 6 months of the year fell slightly over the last 6 years, from 68.9% to 66.7%. Meanwhile, its percentage coming from construction has risen from 22% to 25%. This was the second highest percentage recorded in the last 6 years, down slightly from the 25.5% reported in 2021. Speaking at the company's August 4th second quarter earnings call, Executive Vice President and Representative Director at Kubota, Masato Yoshikawa, said the company's midterm growth targeted in the U.S. is in the construction market, saying, "In our midterm plan, the major growth in North America is not in residential tractors, but rather in construction machinery and other non-tractor areas. And we are determined to increase these areas. We are currently preparing a production plant for construction equipment in North America in Kansas. We are also considering making additional investments in the future." This week's dealers on the move are Ag Revolution and Site Instructor Nobi Partners. AGCO dealer Ag Revolution opened a new location in Vincennes, Indiana on August 15th. This is the dealership's 7th location. Deere dealer Site Instructor Nobi Partners announced on August 16th that it had acquired the Deere Ag and Turf assets of McCoy Construction and Arts Lawn and Mower Shop. Now here's Michaela Paukner with the latest from the Technology Corner.
Thanks, Kim. A close working relationship between OEMs and their dealers results in success for the companies and their customers. Here's an example. Iowa-based independent precision dealer Youngblood Ag carries several lines of Yetter row cleaners, harvest equipment, and closing wheels. Pete Youngblood, the dealership's owner and operator, says there are times when he has a particular product line in mind for a customer, but identifies some hang-ups. That's when he reaches out to Andy Thompson, Territory and AOR Manager at Yetter, to explain the customer's situation and brainstorm solutions. After what's usually a lengthy conversation, they identify the best option for the customer and strengthen the relationship among all parties.
Then when we look at the retail customer, bringing the farmer in with that, we tend to really have a pretty strong bond. I mean, people working with people all the way down to that retail customer.
For me in the business, Andy has been a phenomenal asset. There's nothing better for the end user than knowing that, hey, I'm working with this independent dealer and he's got backing all the way up to the manufacturer.
Youngblood says selling turns into a byproduct with this approach, as the focus is on building the relationship with the customer and showing them that the dealer and manufacturer have their best interest in mind. Youngblood and Thompson did an extended interview with Precision Farming Dealer, and we have videos from that conversation linked in the web story for this broadcast. That's it from today's Technology Corner. Back to you, Kim.
Thanks, Michaela. Linamar Corporation, an advanced manufacturing company based in Ontario, has been building up its ag equipment portfolio in the last 5 years through acquisitions. The company announced in April of this year it would acquire tillage implement manufacturer Salford Group and completed its acquisition of MacDon Industries on February 1, 2018. Before then, Linamar had a relatively low-key presence supplying Harvestech branded corn headers, combine header trailers, and related equipment built in the group's Hungarian factory. Linamar had owned White Farm Equipment in the 1980s and Western Combine Corporation in the 1990s, manufacturing the rotary combine for Massey Ferguson, before selling to AGCO in 1996. The company is also now taking its first steps into the electric vehicle market, according to a recent analysis by BMO Harris's Peter Sklar. Sklar noted that one interesting development is that Linamar disclosed it has been awarded its first commercial vehicle e-axle win for a delivery truck. He said the e-axle is essentially the entire propulsion system for a battery electric vehicle, including the electric motor, gearbox, and all the associated software. While this is only a small contract of about 5,000 units per year, what we find notable is that Linamar is acting as the Tier 1 supplier for the entire system, which indicates a high level of competence at Linamar in electric propulsion systems. The potential for Linamar to apply its electric propulsion system manufacturing ability to its growing ag equipment division could allow it to penetrate the emerging electric-powered farm machinery market. Now here's Ben Thorpe with a data and trends update.
Thanks, Kim. According to Avant Market Group's 2022 Power Brand Study, 54.5% of surveyed farmers own John Deere branded tillage and seeding equipment. The study surveyed 400 corn and soybean farmers across 20 Corn Belt states who were required to have at least 500 tillable acres to participate. Kinze was the second most owned equipment brand in this category at 14.5%, followed by Case IH at 14.3%. All other mentioned brands saw an ownership rate of less than 3% each, with Horsch branded tillage and seeding equipment as the least mentioned brand at 1% of respondents reporting ownership. Farmers were also asked to rate tillage and seeding equipment brands on 7 different attributes. John Deere was rated as the highest performing brand in 5 of these 7 categories, including dealer support, quality, and performance. When asked to rate their seeding and tillage equipment brand based on the value for the money, Kinze was the top rated brand at 8.5 out of 10, followed by Deere at 8 and Case IH at 7.7. Kinze also received the highest rating on its cost to operate at 8.5. Farmers rated John Deere at 7.8 in this category and rated Case IH at 7.6. Surveyed farmers said the 3 most important attributes they look for in a tillage and seeding equipment brand are trust, quality, and performance. Back to you, Kim.
Thanks, Ben. As always, we welcome your feedback. You can send comments and story suggestions to kschmidt@lessitermedia.com.